Hey everybody, Rob Berger here from robberger.com. Today I want to talk to you about cryptocurrencies and in particular Bitcoin. And here's the question. If you're like me, I'm a buy and hold sort of low cost index fund investor. And the question is, should we allocate a portion of our investments to Bitcoin specifically, or maybe more broadly to cryptocurrencies? That's the question I want to look at today. Now, we're not covering the idea of taking a couple $100 or maybe a few $1,000s, investing in Bitcoin or Ethereum or Dogecoin and just hoping for the best. If you've got money that you can lose and you want to do that, that's perfectly fine. My question is different though. Should we actually make it one of the asset classes that we add to our portfolio? And if so, how should we go about doing it? So here's what we're going to do. We're going to talk about 4 concerns that I have about adding cryptocurrency to my overall asset allocation. And then we're going to talk about 4 things to think about and strategies to perhaps take if you do want to allocate part of your investments to cryptocurrencies. So that's our goal. And let me first tell you how this came up, showing you on the computer screen. This is Elon Musk's Twitter account. This is a tweet he sent out. You've probably heard about it, but basically he said that Tesla, they had a few weeks ago said they would accept Bitcoin as for the purchase of a car. They're suspending vehicle purchases using Bitcoin. And he said, we are concerned about the rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. Now, as you might imagine, that got some pretty big responses. One of them came from Mark Cuban. You can see right here. He said, we at Mavs.com will continue to accept Bitcoin, Ethereum, or Ether, and Dogecoin because we know that replacing gold as a store of value will help the environment, and shrinking big bank and coin usage will benefit society and the environment. And it was really these sort of tweets that got me to thinking about the question that I want to address today, including, is Bitcoin really a store of value? So let's get right to it. Again, we're going to start with 4 sort of things to think about, and they're my concerns, frankly, about adding crypto to our asset allocation. So number 1 is Bitcoin is a non-productive asset. Now, that doesn't mean it doesn't have value. It doesn't mean it's going away anytime, but it's a non-productive asset. What I mean by that is, if I buy a Bitcoin and I stick it in a cold vault and 10 years later I have a Bitcoin, that's it. It doesn't do anything between now and then. It just sits there. In that sense, it's not unlike gold. If I buy an ounce of gold and stick it in a safe deposit box and go get it 10 years later, I've got an ounce of gold. In contrast, when we invest, say, in businesses, whether it's our own business or a public company that we invest in through stocks or mutual funds or ETFs, it's a productive business. It's actually doing something. It's manufacturing. It's selling goods. It's selling services. Hopefully, it's making a profit. Yeah, I may still just own 1 share of Apple, but it represents something very different today than it did 10 or 20 years ago. It changed over that time through, just the business cycle and innovation and good marketing and providing products and services that folks want to buy. And I'm very cautious when it comes to investing in any non-productive asset, not just Bitcoin or other cryptocurrencies. It's one of the reasons that I don't have an allocation to gold. It's another reason I don't have direct allocation to commodities like oil or food commodities. So that's the first concern that I have with Bitcoin, something that I think any investor needs to think about if they want to add it to overall portfolio. That's the first thing. Now, the second thing has to do with the usefulness. Just because an asset is non-productive doesn't mean it's not useful. Obviously, wheat and corn are incredibly useful. So is oil. Even gold, to some extent, jewelry and whatnot, is useful. But here, Bitcoin, I'm going to argue, is almost virtually useless as a currency. And I don't even think it was designed to be a currency, at least not in the sense that you and I think about a currency. If you know anything about the Bitcoin blockchain, it's incredibly inefficient, right? I mean, it takes about 10 minutes to process a block. You can do about 5 transactions a second. Visa does 1,700. Yes, there are workarounds for this. You can process transactions off the blockchain and then eventually process them through the blockchain, of course, has to happen. So there are ways to try to get around this. but it's incredibly inefficient and transaction costs are incredibly high. Bitcoin was never really intended to function as a currency, I believe. Now, there are other cryptos that can and might someday, but not Bitcoin. And in that sense, it's not just a non-productive asset, it's practically useless. Now, that though gets us to the third point, the point that Mark Cuban made. He goes, well, and I think this is what he would say to me, maybe among other things, is that, yeah, but it's not really designed to be a currency. I'm not using it as a currency. Yes, there are some things you can buy, like I guess tickets to the Mavericks, but by and large, that's not the point. It's a store of value. Well, maybe. What is a store of value? Well, a store of value is something that holds its value on an after inflation basis. So gold is sort of, I think, the one thing that most people look at as a store of value. And it's exactly why I don't invest in gold. Inflation in the United States over the last 100 years has been about 3%, give or take. Of course, it's been higher than that in some cases. Today, it's much lower than that. But it's roughly averaged 3%. So gold is, over the long term, gone up by about 3%. Why would I want to put my money in that kind of investment? I can do much, much better in stocks. Certainly, I suppose it'd be better than putting it in cash, but I don't invest in cash either. We keep an emergency fund in cash, money we're going to need to spend over the short term in cash. But other than that, we don't keep our money in cash. We invest in things that are going to do better than inflation over time. That's the first concern I have with the Bitcoin as a store of value argument. The second thing is, are we really sure it's going to be a store of value? I mean, if you're watching this video and you're old enough to drive, even if you're a little younger than that, you're older than Bitcoin. So I think it's a little premature to put our stamp of approval on Bitcoin as a store of value. I don't think we know enough. Gold's been around for thousands of years. We have a lot of history on the price of gold. We don't have that for Bitcoin. I suppose it could turn out to be a store of value. But for me, am I really willing to risk a significant portion of my capital in the hopes that maybe Bitcoin turns out to be a store of value? And even if it does over the long term become a store of value, is that where I want my money? I don't want my money in gold, and we know that is a store of value. So that's my third concern. My fourth concern, maybe in some ways the most important, is that Bitcoin, of course, has gone up in price significantly, as we all know, over the last 12, 13, 14 months. Just incredible. And the question, though, is why? And I think if you ask a Bitcoin enthusiast or bull, they'll say, well, it's capped at 21 million, so it's not subject. You can't print more Bitcoin. Or mine more Bitcoin. Once you get to 21 million, that's it. And you compare that to fiat currency not backed by anything. By the way, Bitcoin would be a fiat currency too. It's not backed by anything. But I think what folks would say is, yes, but it's capped. The US dollar is not. In fact, we've seen the Fed, Treasury, printing dollars as fast as they can. And that's going to lead to inflation, maybe even runaway inflation. And Bitcoin will maintain its value because it's capped. Well, it certainly is capped. That's a true statement. But we knew that 12, 13, 14 months ago. Why wasn't it $40,000, $50,000, $60,000 then? Why has it gone up? That to me is the real question. And I think there are two answers to it. One, interest rates, which were already low, even went lower. Interest rates have been at decades-long lowest. I mean, you can almost go back to 1980 and look at a chart and just watch interest rates go down and down and down, and they're basically at zero now as an effective matter in the United States. That's the first thing. And the second thing is our government, of course, has pumped about $6 trillion of stimulus into the economy, stimulus checks, unemployment benefits. That's actually, I think, kept some people from working, business loans, and other stimulus. And that $6 trillion has to go somewhere. So when you combine very low interest rates with a lot of money in the economy, what happens to asset prices generally? They go up. Bitcoin isn't the only thing that's gone up. Dogecoin, as we saw, skyrocketed, and it's not capped at all. Ethereum has gone up. It's not capped. Its mining slows over time, but it's not capped. Stocks have gone up. If you're trying to buy a home, you know firsthand the price of real estate has gone up, and you're probably in a bidding war. The point is, when interest rates are low and there's a lot of money and liquidity in the system, all asset prices rise. That's not new. That's how it's been. Warren Buffett talks about it and has talked about this phenomenon for years. As interest rates go down and liquidity goes up, asset prices go up. Here's my concern. Eventually, those things are going to reverse themselves. I don't know when, but eventually, and this is what the Bitcoin enthusiasts predict, is that we're going to have inflation. Well, they very well could be right. And what happens when we have that? Well, the Fed's going to pull liquidity out of the market, and they're going to raise interest rates. And when they do that, asset values will come down. Real estate will come down, stocks will come down, and I believe Bitcoin and other cryptocurrency values will come down. And we've actually kind of already seen that. When there's even a hint of inflation or a hint that interest rates may go up, Janet Yellen spooked the market a week or so ago when she hinted that maybe interest rates would go up sooner rather than later. What did we see? Stock market didn't like it. Values went down. But so did Bitcoin. Bitcoin didn't like it. Cryptocurrencies didn't like it. They are sensitive to these things as well. I think they've benefited from low interest rates and a lot of liquidity, just like asset values in stocks and real estate and others have as well. So that's my concern, is that once these things reverse, we're going to see a sell-off in cryptocurrencies. I could be wrong. Maybe when this happens, Bitcoin and other cryptos will go in a completely different direction than all of the other assets. But so far, they haven't, and I really don't think they will. So those are my 4 concerns, and that's why I am not investing any of my capital. I'm not allocating anything to Bitcoin or other cryptos. Now, I understand that may not be your answer. You may decide that you do want to allocate some money to Bitcoin specifically and cryptocurrencies more generally. And so if that's you, I've got 4 things to think about. The first is I would personally never allocate at the top level 5% of my portfolio to cryptos. By the way, I would have the same limit if I wanted to invest directly in, say, a commodities ETF. I don't, but if I did, I would have that same hard limit. Frankly, I would think I'd be more comfortable with even 2 or 3%, but I certainly wouldn't go above 5%. That's the first thing. The second thing is I wouldn't be all in Bitcoin if I were going to invest directly in cryptocurrencies. At a minimum, I would also have Ethereum. And if you haven't studied the difference, it's worth spending some time. They are night and day different. Ethereum's blockchain is totally different. It's far more efficient. You can put on the blockchain something called smart contracts, which you could almost think of them as automatic contracts. When one thing happens, something else automatically happens. It's a very efficient way. It could be a very efficient way to conduct transactions. I mean, you could even put your title to your home on the blockchain rather than having to deal with your local courthouse, for example, and lawyers. And it could really make certain transactions very efficient. We're not there yet, but it has that potential. In other words, when I said Bitcoin to me is effectively a useless, non-productive asset, Ethereum I wouldn't put in that category. They're very different. And so I would certainly diversify beyond Bitcoin if I were going to invest directly in the cryptocurrencies themselves. That's point 2. Number 3 is, if I were going to do that, I personally would probably buy on Coinbase. It's a publicly traded company. It's highly regulated. I trust it as much as I can trust any, broker. They offer a vault, a cold wallet, which I think is about as secure as you can get for your cryptocurrencies. It's not the cheapest place to buy. You could buy Bitcoin cheaper on Robinhood, but I would feel much safer with Coinbase. Plus, you have control over your crypto assets on Robinhood. You can't take your Bitcoin off of the platform. You can sell it for cash and go buy it again somewhere else. But that's just not how I would want to hold it directly. I would probably use Coinbase. The fourth thing is that there's another approach to getting exposure to cryptocurrencies and Bitcoin without actually buying the coins directly. And I want to show you that on my screen. I have put together, I call it a Bitcoin ETF. It's not really an ETF. It's just a portfolio on M1 Finance that I put together. And you can see that it has a number of companies. And I want to explain how I put this together. So Goldman Sachs came up with a stock screener to identify companies that have exposure to Bitcoin. And they had a couple of different criteria. The company had to have at least a $1 billion market cap. They had to have mentioned blockchain or cryptos in their SEC filings or in investor presentations, earnings calls. They had to have a price that over the last 12 months was highly correlated to the price of Bitcoin. And they also looked at 6 indices that track different companies with exposure to Bitcoin, one of which I'll talk about. And so they came up with a list, I think it was of 19 companies. I think I have most of them here, although there were a few that aren't available on the M1 Finance platform, but I think most of the important ones, or all of the important ones were. And so that's what we have here. And again, I'll have a link to this portfolio below the video. Now, one thing I want to mention are these different target allocations. With the exception of Coinbase, all of the companies that are allocated at 9% were the ones that Goldman had identified as the most highly correlated to Bitcoin. And so I gave them a 9% allocation. Coinbase is the exception. It didn't make that first cut by Goldman, but it was because it just went public. So it doesn't have 12 months of price data, but I got to believe Coinbase is going to be highly correlated to cryptocurrencies. So I included it in the 9% allocation. By the way, Coinbase made the Goldman list, just not the top of the list, but I've included it in the 9%. The 8% is the SIR NASDAQ Next Gen Economy ETF. This is the one ETF in the list, and it invests in other companies with exposure to cryptos as well. And so I included in here something to consider. In theory, you could get exposure to crypto just by investing in this one ETF. It's an option. My concern with those types of ETFs, unlike, say, a Vanguard S&P 500, is that the net asset value of the fund can deviate significantly from its actual price. So you could be overpaying when you buy, potentially, or not getting the net asset value when you sell. So you got to be careful with that. And then the others, Tesla at 5% and the rest at 3%, are all made the Goldman Sachs list, but weren't as highly correlated as the ones that I've got marked as 9%, but I've included those as well. Now, a couple things to keep in mind here. One, I am not investing in this portfolio that I've put together. As I mentioned earlier, I'm just not convinced that I ought to allocate some of my capital to crypto. So I am not investing in this. I put it together just for information. You can consider it. The second thing is many of these companies are very expensive when you compare the price of the stock to their earnings or their sales or their book value. And that's just something to keep in mind. These are sort of high growth companies. Growth companies generally have done great over the last decade or so, but many think that maybe the tide is turning and that we're going to see a move towards value stocks. I don't have a prediction on that, but you should understand that this is sort of a high risk portfolio. And in that regard, keep in mind that you can pick and choose what you want to invest in, even when you come to this portfolio. And even if you have an M1 account, you decide to open one, you don't have to. You can take this portfolio and then chew it up, add things, subtract things. I mean, you have complete control. You can change all of the targets here. So just kind of think of this as sort of an informational portfolio, I guess. And then the final thing I'll mention is that one of the nice things about M1 Finance, unlike Robinhood, for example, is you can open up an IRA or a Roth IRA. And if I were going to have exposure to crypto, that's what I would want. Now, you can buy crypto directly in an IRA, but you've got to do a self-directed IRA. Maybe I'll do another video on it. There's a lot, it's a little more tedious to do. At the moment, you cannot buy Bitcoin, Ethereum, or other cryptocurrencies directly on M1 Finance. But again, if you want to get sort of indirect exposure, you can check out that portfolio that I showed you. Again, I'll have a link to it below this video. So there you go. My 4 real concerns about Bitcoin specifically and crypto more generally. I love the blockchain. It's not going anywhere. I don't think Bitcoin is going anywhere for that matter. I'm just concerned about its ability to maintain its price, the fact that it's a non-productive asset. It just sits there while I own it. I suppose you can earn some interest on some of your cryptocurrency. That is worth, I suppose, considering. But all those concerns for me, I'm out. I'm just not going to invest in cryptos at the moment. If you are, I've given you 4 things to think about and some different approaches to get some exposure in your portfolio to cryptocurrencies. If you have any questions, leave them in the comments below. Be happy to help you out as best I can. If you haven't subscribed to the channel and you've made it this far in the video, please subscribe and maybe even smash that like button. I would greatly appreciate it. Until next time, remember, the best thing money can buy is financial freedom.